Hello traders and welcome to another video review. Today is Monday, October 11th, 2021. Let's take a look at the Forex calendar at the beginning of the trading week. What do we have here? Not much for today in the calendar. Data from Japan had been released, Preliminary Machine Tools Orders. We got industrial production from Italy, scheduled for release at 10 o'clock. And then eventually, quarter to midnight, there is a visitor arrivals data from New Zealand. As you can see, the previous reading was really bad in New Zealand, minus 41.4% of new visitor arrivals. So that's a not good situation for the country like New Zealand, that where the economy is. The tourist business is a part of the economy. So pretty boring day, maybe on the markets. At least there is not much in the, well, there's nothing basically. Let's face it, there's nothing in the calendar here. But let's take a look at some charts to see what is going on anyway. We are going to do the analysis of a major. So we are going to start with euro dollar. What is going on in the euro dollar? As you can see, previous week, down move, clear down move towards extremely oversold market conditions, right? Okay, so we got low here with the maximum RSI at the level of 26, extremely oversold market conditions. We have a new low, 1.1529, but this low here on the RSI is not a new low. It's a little bit higher. That means we are making a bullish divergence, or as someone might call it, a positive divergence between the price and the RSI indicator, which means we might be doing some sort of a pullback, right? Because ahead of the 50% of the Fibonacci retracement, and that 50%, if we just zoom out, you will see that this 50% is from the COVID low to the 2021 high. This is significant level, 1.1497. This is the 50%, and just around this level there is a significant technical support, long-term technical support as well, just around this level. So please, all of the euro dollar traders, keep an eye on this level, 1.1497, basically 1.15. Okay, as long as we trade above this level, there is a chance for a bounce. Of course, the level of 1.1666 will be the key short-term technical resistance for bulls. Other resistances are here on the chart. The key long-term resistance is, of course, 1.1976, which is this level here. We got this channel. We got the channel, and as you can see, it didn't help bulls to get back into the channel because it was, of course, denied to go higher, and then the channel was abandoned. So we will just move our lower channel line somewhere here. So we will widen the channel here because it looks like the market might be going even lower, right? So please keep an eye on this, on these two levels as well. Immediate technical resistance 1.1604, 1.1613, then the key short-term resistance 1.1662, and the key support and 50% Fibonacci retracement 1.1497. So that's the euro dollar. Now cable. What is cable doing? Cable bounced already. Cable bounced towards the level of 1.3670, right? And as you can see, there is this old channel line here that might give some headaches to the bulls. Bounce was from the extremely oversold market conditions. As soon as we touched the level of 30, there was a bounce, right? Somewhere at the level of 1.3412. So we got the bounce. Market conditions are still negative, but we are touching the neutral level. Now we need a breakout. if there will be a breakout above 1.3716, this is a good sign. This is a bullish sign, because if the momentum will increase as well, so the up move will be supported by the momentum, increasing momentum, then of course momentum is on the positive territory and we might go a little bit higher. There is a room towards 1.3892 without any problems. Okay, so please keep an eye on this level. Let me just put one more line here. Highs from the 14th of the September, 1.3915. So that's the zone that might be hit before the market will get towards the extremely overbought conditions. Okay, so that's the British pound, looking good for a bounce, looking good for a better bounce, higher, stronger bounce towards the next technical resistances here. What is dollar to the Japanese yen doing? There you go. After the breakout, we are soaring higher. As I said, a cup and a handle formation, which is uptrend continuation pattern, and our first initial resistances, which was 111.71 and then 112.25, worked, because this is the move towards those levels. Then we have pullback, bearish engulfing pattern. We have a test of the support was tested positively, no problem here, we going up, and that's why we made the cup and a handle formation. The next target, as I said before, next target is 114.57. That's the next target on the US dollar to Japanese yen. We already got 112.85, so that's only not even 200 pips to the next target. So please keep an eye on the US dollar to Japanese yen. We are in a bullish trend right now on the daily time frame chart. It doesn't matter the RSI now, because the market is trending. It's not consolidating market. It's not a market that is during the horizontal trend or trendless. This is trending market. The trend is up, and that means only the momentum is very strong. So 114.57 is the next target on the US dollar to Japanese yen. So if the US dollar to Japanese yen is going up, euro dollar is going down, what is going on the US dollar index, right? Is it strong index, or if this is a weak index? As you can see here, this is a rather strong index. However, we are having a little problem here with the levels of 94.25, 94.47, right? Those are the technical resistance levels, and those levels must be violated in order to continue higher. Of course, the other thing is that we are now testing the upper channel line, which is often very inconvenient for the bulls, because they need to do the pullback and so on and so on. Nevertheless, the up move and the uptrend here looks intact, which means we should expect higher values on the US dollar index after the 94.47 is violated. Next target is 94.71 and then 95.72, and that's out of the channel. So we have another channel, acceleration channel probably made on the US dollar index. The key short-term technical support on a daily time frame chart is 93.70 and then 93.42. Momentum is strong, is positive, and we are waiting for the uptrend to resume. So that was the US dollar. We should take a look on oil as well, on a crude oil, to see what is going on. As I said, if we break out of this channel, we will go higher towards $80, and there you go. The high of today is 81.09 cents per barrel of crude oil, and that's not the end. We will go higher on the crude oil. As you can see, I'm just zooming out on the chart, and this is already 2019. This is 2018. That's the high, I guess, $74. We are trending higher. Very strong uptrend on crude oil after, of course, the infamous drop during the coronavirus pandemic in March. So where is the next target? Look at this. The price of oil is on the highest level since 2014. That's very expensive. Okay, there was a gap here, and the level of 80 was kind of a gap provider. Nevertheless, as you can see, the last 2014 high is it 2000? It's even 2013. 2013 high is around 111, 112 dollars per barrel. Right now we have 80. A pretty good game changer. Very nice level to change the game. Nevertheless, if violated, the next target is of course around 91, 91.50, $92, and then the next target is around $100. So uptrend on a crude oil as well. We are going higher. And last but not least, let's take a look at crypto. What is Bitcoin doing? What is going on Bitcoin? As we can see, Bitcoin is going up as expected. Nothing new here. The question is whether the wave 3 had been completed and wave 4 was done. That's the question for the correct count of the Elliott wave progression. Nevertheless, the up move, as I said last week and 2 weeks ago, the up move on the Bitcoin has not been completed yet because ABC correction has been done. We are going higher, 61% already done. Bounce was from the 50%. Next target 59,528, which is the high of the previous big wave B. So that's the target for the Bitcoin for the near time. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.